Hello from the Dukas Coffee TV studio. Also in 2015, we are having our analysis on the commodities, on the currencies and the equities. And I'm joined by Jean-Francois Owczarczak from the Management Joint Trust. Welcome to the studio.
Hi Daniel, Happy New Year.
Happy New Year to you as well. So the trends that we saw last year, are they still continuing to unfold? How does it look like at the first days of 2015?
Okay, well, we're on a mosaic view here, a daily mosaic view, so a perspective over the next few months. We have euro dollar, cable, gold, Brent, dollar Swiss, dollar yen, S&P futures and 30-year bond futures. And so as you could see, the euro trend down is continuing to unfold. We still think there's a bit of a potential here. Similarly on cable, gold is still in a downtrend. Brent is also still in a downtrend with more potential. Similarly, dollar against the Swiss franc still has some potential up. Also against the yen, our trend on the S&P is still heading up, and on treasury bonds we're also still in an uptrend. We'll have a closer look at cable. No, at euro dollar. So here we are on an investor's view, and we have an investor's view is a combination of a weekly chart with a perspective over the next few quarters, a daily chart with a perspective over the next few months, and an hourly chart with the perspective over the next few weeks. It is meant to give you an at-a-glance view of how these trends interplay, so you could very quickly access in which trend dynamic you are. So you're still in a downtrend on the weekly. Over the next few quarters, we believe we can make it below 119. We're already there. We've been toning that for the last few months, and could make it below 110 over the next few quarters. So there's more potential to this downtrend, and so still a lot of risk. If we look at the daily, we're still heading lower. We're on an impulsive 2, so that's quite an extended move, but it doesn't seem over yet, and it's been triggered. So we had targets between 120 and 116.60, so we could still lose another figure or two over the next few months. So also here, still risk. We can see envelopes are touching each other. Our risk index is quite oversold, but the trend is still heading lower, and we think there's more to come. On a daily basis, we've pretty much reached our impulsive targets. That doesn't mean that we cannot ignite impulsive 2 targets over the next few weeks. We still think there's time in this move down. It doesn't seem quite over yet. It's quite oversold. There could be a bounce during this week, and for that we will turn to the trader's view. So the trader's view is a more short-term focus meant for traders. It combines a 60-minute chart, a 15-minute chart, and a 4-minute chart. And I'll go in reverse here. If you look at the 4-minute charts, we do seem to have exhausted the potential. We've made a bottom. We're coming out of the oversold zone, so we could have a bit of a reaction today. The 15-minute chart is still heading lower, but it reached its impulsive 2 targets. It is quite oversold on the oscillator and on the envelope, so that would justify that we may see a bounce. However, the 60-minute chart still has some way to go, possibly into the low 118 levels. So also here, we might see a bounce this week, but I would just not act on it right now.
Okay, so this situation has mainly been caused by the new insecurity over Greece, right? So that drives the euro down, but this should actually be a good sign for gold. Insecurity could drive the gold price.
Let's have a look. Well, gold, there's several factors moving on gold. Gold reacts to uncertainty or financial stress, and Greece might be an argument to see more financial strength over the next few weeks, few months. However, gold must also be financed. There's a lot of leverage positions. Rates are going up quite rapidly. Short-term rates are going up quite rapidly in the US. So that is putting a cap on gold, and you really need a big macro story to unfold it. So I think we're still pretty much hitting on the 1200 mark, trying to pass decisively, which hasn't happened yet. And for now, our trends are, at least over the long term and the medium term, are still heading lower. So we have a weekly chart here, which is over the next few quarters could bring us down between 1186, where we are at the moment, and 972. So if you take an average here, you're pretty much meant to have a target around 1050. So there's more to go. It doesn't seem quite over yet. The trend is still heading lower. On the daily chart, less clear. You're quite oversold here on the oscillator, but on the envelopes, you're not under stress yet. And the trend is still heading lower, with targets possibly around 1130 over the next few months. So in this respect, there's not enough evidence here to really forecast that a strong bounce could actually happen from here. On the hourly, we're in a correction up. We've seen quite an oversold situation over the holidays. We'd really need to make it above 1220 to really create an impulsive move and accelerate back up again. So in light of what we saw on the daily and the weekly, we'd still be negative on gold and watch that at 1220 as a mark of hope if we actually make it above.
And Jean-Francois, if we look to the equity markets, January is set to to give the pace for the rest of the year, and also the beginning of the January is important. So how is the situation looking like?
Well, yeah, it's called the January barometer. The first few days of January set the pace for the month of January. The month of January sets the pace for the whole year, and it's true that the month of January has not started really well. We've had a few days down since the opening. For now, it's only a correction down on the hourly charts, and we really need to move below 2011 to create an impulsive move and envisage a stronger move down. So at the moment, we'd say that it's a pretty tamed correction. It's also, outside of the January barometer, it's also a 5 year, so 15, and 5 years are usually very, very good. And so we will counterbalance the January barometer with that 5 year. And at the moment, if you look over the long term, the trends are still valid. If you look at the weekly, it is still heading up in quite an extended move, impulsive 2 up. But we would have the potential to make it above 2200 up to perhaps 2400 over the next few quarters. So you do have some exaggerations. Envelopes are touching each other. The risk index is in the overbought, which might bring some type of consolidation, but in essence, the trend is still there and still has the potential. If you look at the daily, it is still heading higher at the moment. We still have impulsive up here, probably above 2100, maybe 2140. No real stress here at the moment. At the moment, we believe that the trends are still heading up, and we'd have to watch that hourly chart to have a sign of warning if we were to make it below the corrective target.
So far, so good. Thank you very much, Jean-Francois, from the Management Joint Trust with your product fingraphs.com. Thank you and see you next week.
Thank you, Daniel.
And thank you for watching. We see us next week for the next technical analysis. Have a great day.